We've been listening to Donald Trump take questions with the Polish president. They discussed many things: Russia, trade, and the allegations against his nominee for Supreme Court Justice Brett Kavanaugh. Let's go straight to Sarah Westwood. She is at the White House. Sarah, what stood out to you from that press conference?
Well, Bianna, President Trump was addressing the Brett Kavanaugh situation. He said that he feels badly for Kavanaugh and his family, saying again that he's open to this possible delay in the process, that he does think that Christine Blasey Ford, the accuser of Kavanaugh, should be heard. Now, aides have expressed to CNN that they have been trying to get the president to stay in this measured tone, not to derail proceedings. And President Trump also sounding a little more defensive on his tariffs against China and other countries, saying that his trade policy is just getting started, perhaps suggesting that potentially the benefits of this policy haven't yet been realized, acknowledging that it hasn't been an immediate success. And again, saying that he will potentially sign a new trade deal at the United Nations next week, and that he's been pressuring Canada to get on board with that renegotiated trade deal. Right now, it's a bilateral deal with Mexico, but both Mexico and Canada have been hoping to make that a trilateral deal in which Canada is a participant. So President Trump suggesting that the door to that trilateral deal is not all the way closed, Bianna.
News that possibly as soon as next week that they would be signing a new trade deal with South Korea. What we saw there was also a reaffirmation of the close relationship that President Trump has developed with the Polish president, talking about Poland's contribution to NATO and obviously the U.S. as well. The president not missing the opportunity to lash out at countries that he says are not paying their fair share.
That's right. He was highlighting the fact that Poland does meet its defense commitments. It's something that he has been adamant about, that other European nations should step up and meet that commitment to spend 2% of their GDPs on their own defenses. It's one of the reasons why he's developed that closer relationship with Poland. We saw that on display when he visited Europe last year. He did give a big speech in Poland that was viewed as one of the fullest articulations of his foreign policy, standing there in Poland. So this was not his first meeting with this Polish president, but certainly you could see on display, both in the Oval Office and at that joint appearance, the warm relationship that they seem to have developed.
All right, Sarah, we have to leave it there. Thank you so much. Well, President Trump says he's just getting started when it comes to tariffs and trade. U.S. stocks are holding on to their gains in the final hour of trading. The Dow is up more than 200 points. The dollar has recovered from early losses, and that's because the escalation in the trade war isn't as bad as investors feared. In China, the Shanghai Composite climbed nearly 2%, coming off four-year lows. It's still down 19% for the year. Well, President Trump says he's open to talks with China. Those are the words, but the war is growing more intense. It's like a game of Pong. Every hit from one side is matched by the other. Like that graphic we've created right there. Well, we come into the latest round with the tariff scores virtually tied at around $50 billion worth of goods each. The U.S. serves a strong hit, now on $200 billion worth. It's a quick response from China right away, $60 billion worth. Well, President Trump is threatening to hit back hard. Tariffs on $267 billion worth of goods. That covers all Chinese imports into the United States. And that means China... Sorry, I'm distracted by these graphics here. That means China will have a difficult time responding in kind. And that would mean game over. So let's bring in our referees. Paul Donovan is judging the economics. He's the global chief economist at UBS. And for the politics and U.S. reaction, Catherine Van Pelt. She's a CNN political commentator and a columnist for the Washington Post. Thank you both for joining us. It's great to have these two referees on. So, Catherine, let me start with you. You have an article out today that says Trump could play Scrooge this holiday season. That's talking about the latest round of tariffs. You're saying that this could really impact a lot of Americans, a lot of his voters, and a lot of people going out anticipating to shop this holiday season. You say Trump's tariffs could make Black Friday truly bleak. Explain.
So Trump has been warning us about this supposed war on Christmas for a while. I would argue that he is now the primary perpetrator in the war on Christmas, and that he is imposing tariffs on now something like $250 billion worth of Chinese goods. Many of them are consumer goods. Many of them are on inputs that then become consumer goods. A lot of the products that will be affected are things that are prime Christmas shopping targets, things like TVs, mittens, hats, computers. Some things that were supposed to be on the list have been taken off, a bunch of Apple products, for example. But nonetheless, you're going to see some of that get passed through to consumers. We don't know exactly how much at this point, but consumers themselves have been dealing with wage gains that barely keep up with inflation. Now they're going to be expected to be paying more money for their Christmas shopping as a result of Trump raising prices for them.
And the president and his advisors saying we might feel a little bit of pain, but in the long run, we'll see the benefit of it. Paul, a lot of reaction I've seen from China, though, is just confusion from policymakers over there, not really knowing what to anticipate from the president, and a lot of analysts confused about how long this match of going back and forth can continue.
Yes, I think that part of the problem from the Chinese side is it's not always entirely clear who is speaking for the administration. And of course, so much of trade protectionism comes under the commander-in-chief powers, so ultimately rests with the US president himself, who can perhaps be quite a difficult person to predict. But I think in terms of the length of the tariffs, this is quite important, because I don't actually agree that this is going to necessarily damage Christmas. It takes about 4 months for tariffs to filter through, even on consumer goods, to actually hurt. Now, this tax on consumers is going to damage, and it's going to, in all probability, lower US growth in 2019. But I think the staggered nature of the tax increase and the fact that it takes about 4 months minimum for the taxes to pass through to the consumer means that certainly the consumer's not going to notice these at the midterm elections, and they may not notice them until January or February of next year.
And the president can point to the U.S. economy, which he's been doing on a daily basis. The stock market is up triple digits today. He pointed to the Chinese economy, which he noted has been weakening, and their stock market has been doing the same. How much longer can the president point to these kind of metrics and assume that the U.S. is always going to win?
Well, I think the president can point to the metrics as long as he wants. The equity market's got nothing to do with relative economic performance, pretty much. I mean, equities are not an important part of the economy. Most Americans don't own equity. The listed companies only account for a quarter of the economy and not necessarily the most dynamic and important part at this juncture. China's equity market is largely irrelevant to its economy. It doesn't say anything about it. China's economy, of course, is growing faster than the US, substantially faster. You would expect that. It's an emerging market, middle-income economy, so it would always be growing faster. So I think that these sort of judgments are probably quite tricky. The Chinese economy has been growing above trend growth for some time and is now going to be slowing down. The US economy is on a sugar high from the tax cuts that we had at the start of this year. The tax hikes that we're now getting are not sufficiently quick to offset that, and so that gives you a temporary distortion. But next year, the US economy is going to be slowing down. The sugar high of the tax cuts will be fading, and the tax increases that consumers are now facing will be starting to erode growth.
But of course, Catherine, this would come after the midterms, and the president, as well as both Republicans and Democrats alike, are focused on the midterms coming up. How much longer can the president go out there and point to a sugar high, like Paul alluded? I mean, he's right. Most Americans don't own stocks, but psychologically, especially when you have a president that's reinforcing a strong economy and pointing to a stock market, psychologically, that does impact people, and it does impact voters.
Well, maybe, yes and no. If you look at a lot of other metrics about the economy, we're more or less on the same trends that we had under Obama. In fact, if you look at average monthly job growth, for example, or if you look at the unemployment rate is lower, but the trend has been basically the same. So, the level of the economy is higher than it was. But if you look actually at the pace of growth at some of these other kinds of metrics, aside from GDP growth, which I agree is largely because of a short-term sugar high, a lot of it looks more or less the same. The other thing that I would point out is that even if consumers don't feel these price increases right away, and I think they will actually feel them for some goods, but maybe not everything, you still have other constituencies that are hurting. For example, farmers. It's not only our tariffs, of course, that are in play here, it's the retaliatory tariffs. And farmers, manufacturing workers, other kinds of workers and industries have been hit by this retaliation. To some extent, Trump is trying to kind of allay their concerns with this farmer bailout, for example. But the question is, will all of those constituencies continue to stand behind him if, in fact, their wallets are affected, which they could be between now and the midterms?
And you see the friction within the Republican Party itself, not to mention within the administration. He has advisors that are pushing for him not to impose new tariffs. He has others that are saying that is the right thing for this administration to do. Catherine, Paul, my two great refs, great to have you on. Thank you so much.
Thank you.
Thank you.
Well, coming up, some tough news for Tesla, which sent shares of Musk's electronic car maker tumbling. We'll explain next, coming up after the break.
Most people don't